A semiconductor stock just posted one of the wildest single-day rallies we've seen all year. And we're talking a move that could reshape your portfolio if you're holding the right chips. The question is, will it hold? Let's find out what it means for you. Let us start with the indices. So the Nasdaq had a solid day today, up 2.54%, closing at $25,809.66. That's a nice bounce, right? But here's the thing. On a weekly basis, we're still down 3.81%, so this feels more like a relief rally than a sustained breakout. The semiconductor sector is absolutely carrying the load right now. You've got chip designers and equipment makers leading the charge, which tells me there's some optimism building around AI productivity and the ongoing demand for next-gen processors. It's a good sign after a rough week. The Dow also climbed today, up 1.86%, sitting at $50,848.75. That's a more modest gain compared to the Nasdaq, which is pretty typical. The Dow's weighted toward industrials and financials, so it doesn't get as much of a boost from the chip rally. For the week, though, it's down 1.38%, which means the Dow is holding up way better than the Nasdaq. This kind of divergence tells me we're in a selective rally, tech leading, everything else just treading water. Not a full risk-on environment yet, but definitely not pure panic either. Now here are the top movers of the day. KLAC Corporation, KLAC. Okay, this one's bonkers. Up 1,029.26% in a single day to $2,411.64. Now, I've got to be honest with you, that kind of move is so extreme it raises some red flags. Could be a data anomaly, could be some kind of corporate action we're not fully tracking, or could be pure algorithmic chaos. Regardless, KLAC is a semiconductor equipment giant that's been riding the AI wave, and it's up 13.16% for the week. This is a name worth keeping on your radar, but that daily move? We need to see if it holds or if it's just noise. Lam Research, LRCX, another chip equipment play, and this one's posting real, sustainable-looking gains. Up 12.65% today to $362.52, and up 7.76% for the week. This is part of that broader semiconductor equipment strength we're seeing. These are the folks who sell the tools that chip makers use to manufacture all those AI processors. So when demand is hot, LRCX benefits. That's a legitimate narrative, and the moves are backed by sector momentum. ORCL, down 8.53% today to $184.10. Yeah, that hurt. And the weekly loss, down 22.1%. That's a brutal couple of weeks. ORCL's a cloud and database giant, and it seems like maybe the market's reassessing growth expectations, or there could be some profit-taking after a long run. This diverges sharply from the chipmaker's strength, which tells me there's some rotation happening out of megacap software into semiconductor equipment. Keep an eye on whether ORCL finds some advanced micro devices, AMD, up 7.97% today to $488.45, but the weekly story is down 6.64%. So AMD's had a rough week overall, but it's recovering today alongside the broader chip rally. AMD makes CPUs and GPUs, so it's definitely a beneficiary of AI infrastructure spending. Today's bounce is likely part of that semis-led risk-on trade, but it hasn't fully recovered the week's losses yet. This is a name that moves with sentiment around AI productivity, and Freeport-McMoRan, FCX, the copper and metals miner, up 6.86% today to $66.34, but down 4.81% for the week. Copper is getting bid on the idea that if economies stabilize and energy transition continues, you need more of the red metal for EV batteries and grid infrastructure. So FCX is riding that maybe the world doesn't fall apart narrative. It's way more moderate than the semis, but it's part of a day where risk assets are getting a little bit of love back. Now let us look at energy and fuel. Oil took a hit today, down 4.68% to $85.82 a barrel. And this week, down 7.76%. That's a meaningful decline. Look, we're seeing some supply growth come online, demand concerns are creeping back in, and the market's just losing steam. No major geopolitical shocks right now. So it's mostly about economic outlook and the reality that maybe we're not burning as much fuel as we thought. Tomorrow we've got the Baker Hughes rig count coming out, so keep an eye on that for any production. Natural gas dropped 3.14% today to $3.08, and the weekly loss is even steeper, down 7.78%. Summer's here, cooling demand is picking up, but storage levels are holding steady and there's no major supply disruption. This is pretty seasonal behavior. You might see some price support if a heat wave pops up, but for now, it's just meandering lower as the market waits for the next demand catalyst. Moving on to metals. Gold actually bounced today, up 2.92% to $4,228.30. Pretty interesting, right? Because the weekly story is down 5.53%, and here's what's happening. People are nervous about inflation expectations, but the dollar's been so strong that it's squashing gold demand overall. Today's pop could be some bargain hunting after that 6-month low we just hit. The inflation fears are real, but they're not enough to overcome dollar strength and rising real yields. Gold's in this weird limbo where traditional safe haven demand isn't as powerful as it used to be. Silver crushed it today, up 4.4% to $67.44. That's a bigger move than gold, which makes sense because silver's got that dual personality. It's part precious metal, part industrial commodity. The weekly loss of 8.59% is steeper than gold's, so silver got hit harder on the way down. But today's bounce is telling me some traders think industrial demand might pick up, especially if the economy doesn't crater and manufacturing gets a bit of oxygen. It's tracking closer to growth bets right now than pure safe haven demand. And finally, let's look at tomorrow. All right, here's what we're watching tomorrow. Friday morning, we've got the University of Michigan sentiment data at 10 a.m. That's your consumer mood check. Those inflation expectations numbers, especially the 1-year and 5-year readings, are going to matter because markets are still trying to figure out if we're looking at sticky inflation or a slowdown. And then mid-afternoon, we get the Baker Hughes rig counts and some CFTC positioning data on crude and gold. Those won't move the needle as much, but they're good context for where money's flowing. Coming into Friday, we've got the Nasdaq fighting some weekly headwinds but showing signs of life today. Semiconductors are hot, big cloud names are struggling, and gold's in this weird place between inflation worries and dollar strength. Stay tuned for tomorrow. These Michigan numbers could set the tone for next week's entire momentum. You're doing great so far this year. Keep watching the data. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.